Hello and welcome to KFX Trading. If you're new, please smash that like and subscribe button. We're going to be continuing with our focus on ranging markets because it is the time of the year. Previous couple of videos we talked about trading within the range, but I've received a bit of feedback on, hey, how do you trade once you've missed that? Once you've actually broken out of the range. A lot of new and beginning traders, they like to wait for that initial breakout and catch it just as it's happening, or I don't know why, but a lot of new traders, and even myself included, at the beginning, you always rushed trades. You always thought you're gonna miss that setup. There's nothing to miss. There really isn't, all right? Whenever there's a setup and something happens, whenever there's a reaction, there's a pullback and then a continuation. So always keep that in mind. If you've ever missed a move, know there'll be a pullback and then another reaction. It's going to be the same size or half that size, but it's going to be enough for you to really make a good return. So we're going to be talking about what happens. Again, tips and tricks. You have a ranging market. You always ask yourself, what happened prior to this range? For these examples, we're in a bullish market. So you see the market was pushing to the upside. We've then come and we've started to form a range. Always wait for that initial breakout, and it needs to be a strong breakout. It needs to be a confident break, okay? Because if it's not a confident break, it might be a fake out, okay? And if you have a fake out, you're going to try and go with that breakout direction, and it's just going to reverse and respect the range again. So you want the market to break out, pull back to where it actually broke out from, and then continue that push out of the range. So let's have a look at the trade that I took, and then we'll break it down in further detail. Okay, here we are. So you can see the market is clearly ranging. What did we have? We had a breakout. And look at this strong breakout. So we've broken and closed above all of these highs. That's what we want to see. Market's pushed up a little bit more, and now we've retraced and we're coming back towards the range. Now, we're either going to respect the range and continue to push down back to our support zone, or we're going to see price action here and get a long setup. So let's see what happens. All right, so the market's come back. We're getting a really good reaction. I'm just going to go ahead. I'm going to put a buy order in.
Order submitted.
All right, looks like what we're getting is a piercing pattern. We're getting a good reaction here. Now it's not so good, but we're getting a good strong reaction. Let's just see how this candle forms. This looks like a piercing pattern. Again, price action is king. You need to know price action if you're going to be trading. So we've got a few seconds left, but this looks good. This closes strong, and I'm going to put a buy order above it and wait for market momentum to trigger me in. Got 2 seconds. All right, I've just put it above this candle. So let's see what happens. Let's see if we get triggered in. Again, our theory is we're in a long market. Market is bullish. We enter the range. We've now broken out of this range, and there's a good chance that we're going to push up and break out and continue this bull run. Let's just see what happens.
Order filled.
All right, sweet, we've been triggered in. Okay, market broke out, retraced to our area of interest, our former resistance, now support, and the market's pushing to the upside. We're in quite a nice profit already. Let's just see what we get. All right, we're in the trade. We're in a trade which was a ranging market. Market broke out of this ranging market and pulled back. We've had a piercing pattern, and we're right on that 9 simple moving average. See how we bounce on the simple moving average? So this is how you use a simple moving average with other trading strategies. So this is a range breakout strategy with a simple moving average. So market broke out, strong breakout, pulled back. We pulled back to this 9 SMA. We bounced on it. We put our buy order just above this candle. market momentum triggered us in, and now we're pushing up. We're aiming for a base trade of about 20 pips. So let's see what happens. Right now we're in a very, very, very good profit.
Target filled.
Absolutely beautiful trade. Market came to our area of interest, bounced, shot straight up. Textbook trade. You can't get much better than that. Let's quickly explain this now in a little bit more detail. All right, as you've seen in the trade, what happened? It was a bullish market. Market came into a range, formed a clear range. We broke out of this range, a good strong breakout, and then you wait for your pullback. This was the pullback. Price action. What was our price action? It was a piercing pattern. Beautiful. Entered your long. I like to aim for base points, so I'll look for a 20 pip trade. Hit my target. Absolutely beautiful. What do you need to understand? You need to understand price action. You need to understand support, resistance. Okay. If you're keen on learning, I've got courses for all of this, broken down, simple to understand, and very fast paced. So you're not spending 50 hours learning these concepts. These are simple concepts. If you notice my charts are simple. Comment the word courses down below and I'll send you a link. Again, I cannot stress enough, don't be paying $300, $400 for a challenge. Apex funded trading. Jump on their website. They're a futures platform. They give 80% discounts. You're going to be paying 35 bucks. I've got a discount code for you. Comment the word discount down below and I'll send it through to you. Hope that makes sense, guys.